This is the Empowering Healthy Business Podcast, and I'm your host, Cal Wilder. Each episode, we'll dive into topics important to folks who want to run businesses that are both nicely profitable, sustainable, and scalable, and who want to achieve balance in their lives and realize their potential inside and outside of work. This show is sponsored by SmartBooks, provider of bookkeeping and accounting for businesses. Let's get started. Welcome to the Empowering Healthy Business Podcast. Part of running a healthy business is managing tax obligations. And, we can all have different perspectives on how aggressively to try to reduce our tax liabilities. And our political beliefs may play a part in that, since we're fresh off an election season and a lot's going on in this country at the moment as we record this in early February 2025. But at the end of the day, in our experience, most business owners are interested in understanding how to reduce their tax bills. And so joining me again is Head of Tax at SmartBooks, Greg Reed. Welcome back to the show, Greg.
Thanks for having me back.
So this is timely, Greg, because you're just fresh off finishing a set of course of study with the American Institute of Certified Tax Planners, right?
Yeah, so I just got over my jet lag from San Diego. It was good to be out there. It was a pretty intense couple of days. We went through some pretty advanced stuff in terms of tax planning, and at the end of all that, I got my certified tax coach designation. So super excited to share that. What we learned there with our clients, and hopefully we can save our clients some more money.
Great. So let's talk a little bit about, terms before we dig into tax planning and what that means. Because I guess ultimately with this episode, I want to talk about the difference between tax filing and real tax planning, and help the audience understand what, a more comprehensive tax planning approach looks like compared to a CPA giving you a pointer or two when they notice something when they file your return, or answering a question when you ask them. But before we do that, let's clarify a little bit of terminology, which I think in the small business world, the word accountant tends to mean the CPA who files your taxes, right?
Yep.
And in our world at SmartBooks, we tend to call accounting, kind of the monthly bookkeeping accounting you do to maintain your books so that you can produce financial reports to understand and manage your business. And then the tax planning and filing and advisory kind of falls in the category of your tax CPA or your tax advisor. And so in big companies, CPAs may get into GAAP and audit and everything. In the small business space, they tend to file tax returns for a living, right? And so where do you tend to draw that line between, tax CPA and monthly accounting?
Yeah. So I mean, I think the average business owner, like you said, they think about they hear accountant and they think that person's going to do their bookkeeping, their payroll, their tax returns, and it's kind of a one-stop shop, and it's definitely not the case, especially now with everything being so complex. I mean, not just bookkeeping and accounting, like that itself is complex, but then you have the tax laws, you have the new administration coming in now. Like obviously tax laws are going to change, and then payroll, forget about it. That's a whole nother area that can just be people make careers out of. And so it's important to know, for business owners to know kind of who they're putting on their team, and then when things do come up, who they should be talking to. And I think like you said, your accountant slash bookkeeper, that's going to be your monthly, journal entries, debits and credits, making sure your financial statements are clean, making sure your bank accounts are reconciled. And, it's building the foundation for things that helps me do my job. Obviously, like I said, payroll's a whole nother side of that we don't really have to get into. And then I think, you get your average what I refer to as CPA, but that's probably a bad designation because you can also be an enrolled agent and prepare tax returns. So you get into your average tax preparer. And the tax preparers have always been the guy with the green shield on his at his desk, and you kind of work the million hours right through April 15th, and you kind of put numbers in boxes, maybe talk to them once a year, and outside of that, you don't really want to see them, and sometimes it's hard to get a hold of them.
And they don't really want to talk to you that much. They're not that proactive in general, right?
Spend the rest of the year recovering from the April 15th deadline. And then you have your proactive tax preparers who will talk to you at year end, maybe do some tax projecting, maybe throw out a few pointers, and where the certified tax coach designation really comes into play is we're the people who can work with you to really reduce your taxable income or your tax year over year. So if you're working with a certified tax coach like myself, you can we can try to save you $25,000-$30,000 a year. In 4 years, you're probably looking at maybe having an extra $100,000 in your bank account. Or you can also look at it as when you make that next quarterly payment, maybe you're reducing it by half or 75%. And that's the true value that working with someone who kind of digs into the tax law to make sure that you as the business owner are paying the least amount of tax.
Right. And so, I think a lot of business owners I talk to, Q4 rolls around and then they start to wonder what they can do to reduce their tax bill. But, what's the right time for folks to really start doing tax planning?
I think really it's any time. I always say that the earlier the better, because there's a lot of times where if we can implement stuff earlier in the year, you can take advantage of it sooner. Maybe it's entity structuring. You have to do an entity analysis, and if that means that you have to maybe work with an attorney to set up new businesses. December's a busy month. Everyone's got the holidays. You just come off Thanksgiving. You don't want to be running around trying to set up new entities, set up maybe a defined benefit plan, stuff like that during that time of the year. So I'd say the earlier the better, and any time is good.
So no, when we spoke one of the earliest episodes of the podcast, I think it's episode number 3, we talked about top tactics for small business owners to pay less money in taxes. And, if I remember back to some of those tactics, those are things you really need. Like if you're doing the Augusta rule, that's something you really need to do over the course of the year. You can't cram it all into Q4, right? So there's certain things that
Yep.
if you're not setting up a new entity or a new employee benefits plan, you've got to do it over the course of the year.
Absolutely. I think the easiest way to kind of differentiate ourselves from, say, a traditional tax preparer, because a tax preparer is still going to, throw out ideas, like the Augusta rule, or cash basis versus accrual basis accounting, all those home office expenses, stuff like that. We kind of look at the tax situation as, how can we get these deductions? How can we get the Augusta rule to apply? And that's where we look at maybe like entity analysis to see, can we set up a few more entities to take advantage of these laws? Is there a business reason to do this? Make sure that we're we're audit proof, all that stuff. So I think we're kind of looking at it from the standpoint of these opportunities are out there. We just need to move the pieces around to make it so that the business owners um, are able to take advantage of them.
Right. And I think when we've talked about this, you kind of have differentiated to me the difference between, some one-off tactics that you can do versus a more comprehensive strategy, right? Like you could decide to buy a vehicle at the end of the year to take advantage of Section 179, accelerated depreciation. And that's more of a tactic, right? What's
Yeah,
your strategy? Is your strategy to, defer income into next year because you have a strategy based around tax rates and your expectations of tax rates for the next few years? Or your strategy to take advantage of entity structuring? Is your strategy to take advantage of employee benefit plan options? Is or all these other
yeah.
strategies, right?
So I mean, when we do a tax plan for someone, we send a pretty extensive questionnaire to them and have them fill it out because we want to know uh, that person's whole. We want to know all about that person, their business, and themselves personally. Because you might say, oh, I have some pretty big medical expenses coming down the pipeline. Well, we need to know that because now we can plan to try to do maybe a medical expense reimbursement plan to get them all covered, and you don't have to worry about the 7.5% floor on your itemized deductions.
Right.
um, and I think some people get the um, tax planning versus tax projecting. um, I think they kind of gray that line a little bit. And there's a pretty significant difference between the two. If you have a CPA who's just telling you what you're going to owe, maybe they tell you in December what you're going to owe in April. Great, you can plan for that. I've done that for clients. Um, but that's just tax projecting. They're not really providing a ton of value to you if um, if they're not helping you reduce that tax liability.
Right. Another thing is common is playing the cash basis tax game, where we try to keep the books on an accrual basis for clients to provide a more accurate representation of their financial performance on a monthly basis and make the financial performance metrics meaningful and consistent. But it's often advantageous to file taxes on the cash basis, right? So reducing taxable income at the end of the year by being a little bit slow to receive client payments or a little bit fast to pay vendor bills. A lot of small business owners do that. But again, that's kind of in the tactic category potentially. But the overall strategy comes back to whether it makes sense to defer taxable income into future years or take it, or recognize it now, right? So can you talk a little bit about, deferral strategies versus, other strategies where you may just eliminate your total tax bill that you would ever have to pay?
Yeah, that's what we love, right? I wish we could do all elimination strategies, but yeah, I mean some of these strategies. So like an accrual to cash conversion at year end, that's just a deferral strategy. You're deferring income into the following year and trying to accelerate expenses into the current year so that you can get that tax bill down. Um, and it's a great strategy, but it is just that, it's a deferral. And you kind of have to watch the tax rates a little bit because they're going to go up, and or we think that they're going to go up. And if you defer all this income and then the tax rates go up, you've actually done yourself a disservice. So you gotta be careful when you're playing that deferral game. A short term gain might be a long term loss in some of these situations.
Right. If you're a small growing business and you're $100,000 of taxable income this year, but the business is growing rapidly, that becomes 200,000, hopefully becomes 500,000 or more, right?
Yeah,
You really
you
want
want
to
to
be
play
paying.
that.
Yeah.
Yeah, you want to play the income averaging game. Um, if you can keep your income at, say a steady, 150, $200,000 a year, that's a lot better than going from say 100,000 to 500,000 to 300 to 700. Um, it makes it easier to plan. It makes it easier to plan for the taxes. Um, and yeah, so yeah, there's a lot to it.
Yeah. So if I'm a business owner and I want to do some real tax planning to put together a comprehensive strategy for the next, 5 or 10 years, I assume I'm going to have to do some significant work as part of that process. It's not going to be a silver bullet that my CPA hands me, right? So, like, how do I do that? How do I do my role most effectively?
So working with someone like myself, we would put together a pretty comprehensive tax plan for you, given your current situation now and what your goals and objectives are over the next few years. But we also work with our clients to maintain that over the course of the year, and so and that goes on, year over year. Um, so we're making sure that you're staying on top of the tax plan that we put together for you, so you're getting all the advantages. You're doing all the things, so dotting your I's and crossing your T's, so that if the IRS were to audit you, you can make sure you have the documentation necessary to cover yourselves. Um, and then, keeping that open line of communication so that as things change, because inevitably they will, we can alter that tax plan, maybe bring in some new tactics. Um, depending on your situation, like I said, laws are going to change. We're going to be able to take advantage of a lot of that, and then we can kind of work with you in a very fluid manner.
Now, you've done some plans with some SmartBooks clients over the past year. We've spoken about, when you go through a real comprehensive planning process, how much money have you been able to save some of these clients?
I worked with a client in August, and we saved $200,000 in year one. They're a pretty big client, so the numbers have to match up to the revenue and the income. But this particular client was doing pretty good. Um, we were able to put together a good tax plan for them, and yeah, I think we got to it was about 178,000 in taxable savings in year one, and then going forward, it's probably close to like 125, 130,000 of tax savings. Had they not worked with us, then they would have been potentially on the hook for that that tax.
Right. You would have
So
filed their tax return at the end of the year, but you wouldn't have been able to save them much money at that point because they didn't have a comprehensive plan to go execute over the course of the year, right?
absolutely, yeah, and so like we did this in August, so we were able to implement all this stuff over the summer and take advantage of everything now. And so it was a pretty good situation. But I'd say on average, we're going to save clients anywhere between like $15,000 to $30,000 a year, just by figuring out the deferral or elimination strategies, and not only that, but like helping them with other things like retirement savings or putting money aside for kids' college, things like that. And we work with other professionals, so like a financial advisor or attorneys to, kind of make sure that we're staying within the letter of the law too, because obviously, we can't be practicing law or giving financial planning advice. So.
Right. Right. What else should the audience know around this topic, Greg?
Um, I think just being aware that, um, of what your of what you're getting from your existing tax preparer, CPA, EA, however you want to refer to them as. You know, they might be a good friend. They might be your parents use them, so now you use them. But just make sure that they're working for you and not for the IRS. Make sure that they're giving you the proper tax plans, tax ideas, and just know that there are often times, if you have big expenses coming up in your life and you own a business, there might be a way to, write that off as a business owner.
Right. I've seen clients write off things that looking at it, I knew they shouldn't really take them as tax deductions because they were just expensing through the business without a formal employee benefits plan or something like that in place, right? And so, they may be deductible given the proper structure and strategy and tactic, but just writing the check doesn't make them deductible, right?
Yeah, I mean, everything that we do is definitely above the line. Where everything's cited, we've got court cases to back up our strategies. We're not going to ever do anything that's going to put the client at risk. That doesn't help anyone. But you're right. Documentation is key. How the money moves is key. It's just how you have to do it. Sometimes it can be annoying, especially if you have multiple entities. But if you're saving $30,000-$40,000 a year, it's worth it.
It's worth a few hours a month to save that much money.
Yep.
Well, great. Well, Greg, thanks for sharing this information with us. I think it's important to really understand for small business owners, there's a significant difference between a comprehensive tax plan, considering not just this year, but the next few years, and real strategies and a comprehensive plan versus getting your taxes filed and maybe getting a pointer here and there. I guess that's the takeaway for me is, there's a big difference between doing real tax planning and doing, tax filing plus a couple pointers, right?
Yeah. Yep. So, we're just always trying to get better for our clients. So this is a fairly new designation. Obviously, I just got back, and we're excited to help more and more taxpayers out.
Yeah, I know you've always been really emphasizing the benefits of tax planning and doing it for as many clients as are interested in it. But I'm really excited now that you're pursuing the advanced certification, and now we're going to be able to deliver even more value on the planning side of things.
Yeah, no, it should be good. It's a good community. We have a lot of members, and we can tap into those resources as well. So we've got a good team around us when it comes to tax planning.
All right, Greg. Well, I look forward to having you back on the show in the future.
All right, sounds good. Thanks for having me.
Bye. Another episode in the books. Thank you so much for tuning in. For show notes and more, visit empoweringhealthybusiness.com. If you would like to have a one-on-one discussion with me or possibly engage SmartBooks to help with your business, you can reach me at C-A-L, at empoweringhealthybusiness.com or message me on LinkedIn where I am easy to find. Until next time, this is Empowering Healthy Business, the podcast for business owners, signing off.